Hey everyone, welcome back to Corporate Decoder, a place where we decode the most complex financial documents to give you the straight truth. Today we are diving into the Pzena Fund's latest annual report, and let me tell you, it's a whole lot of numbers. But don't worry, we're going to sift through it all and find the juicy bits, the good, the bad, and the ugly. So, will these funds make you rich or break the bank? Let's find out. Before we get started, if you love digging into corporate filings and want more simple explanations of complex financial information, make sure you hit that subscribe button. And hey, we've got a fantastic community growing on Discord, linked down in the description below, where we break down these documents even further. Alright, let's dive right into this SEC filing from Pzena Funds. This report covers the period ending February 28, 2025, and it's packed with details on several of their mutual funds, including the Mid Cap Value Fund, Emerging Markets Value Fund, Small Cap Value Fund, International Small Cap Value Fund, and International Value Fund. We're going to bypass the legal jargon and focus on what really matters to investors. First up, let's look at the Pzena Mid Cap Value Fund investor class. For a hypothetical $10,000 investment, the cost for the past year came in at $123, which is about 1.24% of the investment. Performance-wise, this fund actually saw a dip of 1.24% of the investment. Performance-wise, this fund actually saw a dip of 1.69% over the year. The report mentions this was due to stock selection in certain sectors like consumer discretionary, industrials, and technology. Looking over the last 10 years, this fund has seen an average annual return of about 7.73%. For comparison, the Russell 100 index did much better in the past year, gaining over 80, but Pulp mentions this was due to stock selection in certain sectors like consumer discretionary, industrials, and technology. Looking over the last 10 years, this fund has seen an average annual return of about 7.73%. For comparison, the Russell 10,000 saw a dip of 1.69% over the year. The report mentions this was due to stock selection in certain sectors like consumer discretionary, industrials, and tactical 1.69%. On the flip side, top contributors to the mid-cap value fund's performance included Equitable Holdings, C&O Financial Group, and Delta Airlines. But the big detractors, the ones really dragging performance down, were Geldwen Holding, Olin Corporation, and Dollar General Corporation. Some key stats for this fund as of February 28, 2025 show net assets around $135 million with 41 holdings. The net advisory fee for the year was about $1.07 million, and the portfolio turnover rate was 35%. This turnover rate means that about a third of the fund's holdings were bought and sold during the year, which can indicate active management but also higher transaction costs. Now let's switch gears to the Pzena Emerging Markets Value Fund investor class. Here the costs for a $10,000 investment were a bit higher at 1.42%, or $149 for the year. Performance was positive with a 9.57% return over the past year. The report highlights that emerging markets generally did well, with China leading the charge. However, this fund underperformed its benchmark, the MSCI Emerging Markets Index, mainly due to stock selection in China and its overweight in South Korea. And Brazil, over 110 years, this fund has averaged an annual return of about 5.92%, and Emerging Markets Index, mainly due to stock selection in China and its overweight in South Korea and Brazil. Over 10 years, this fund has averaged an annual return of about 5.92%. For the Emerging Markets Fund, top contributors were Onohei Precision Industry, Alibaba Group Holding, and Taiwan Semiconductor Manufacturing. On the downside, Samsung Electronics, PT Bank Rakyat Indonesia, and Hankook Tire and Technology were the main detractors. This fund is significantly larger, with net assets close to $2.14 billion and 65 holdings. The net advisory fee was a hefty $19 million, and the portfolio turnover was 22%, suggesting a bit less active trading compared to the mid-cap value fund. Moving on to the Pzena Small Cap Value Fund investor class. For a $10,000 investment, the costs were $128 or 1.31%. Performance here was a downside with a 15% loss over the year. Similar to the mid-cap fund, the market for small caps was mixed, with a late surge and then a pullback. Stock selection in industrials, consumer discretionary, and basic materials dragged this fund down. Over for small caps was mixed, with a late surge and then a pullback. Stock selection in industrials, consumer discretionary, and basic materials dragged this fund down. Over its life since inception in 2016, it has averaged about 7.48% loss over the year. Similar to the mid-cap fund, the market for small caps was mixed, with a late surge and then a pullback. Stock selection in industrials, consumer discretionary, and basic materials dragged this fund down. Over its life since inception in 2016, it has averaged about 7.48% annually. The top contributors for the small cap value fund were C&O Financial Group, Columbia Banking System, and Old National Bancorp. The notable detractors were Gelben Holding, Adient BLC, and Olin Corporation. This fund has net assets of about $60 million with 49 holdings. The net advisory fee was around $315,000 and the portfolio turnover was 30%. PIV-EF Pzena International Small Cap generally posted signal. Let's look at the Pzena International Small Cap Value Fund investor class. Investors here saw costs of $150 or 1.44% on a $10,000 investment. The fund did well performance-wise, gaining 8.66% over the year. International small caps generally posted strong returns, especially with positive sentiment around interest rate policies in Europe and Japan. However, this fund underperformed its benchmark, the MSA World ex-USA IMI, with stock selection in industrials, consumer staples and the United Kingdom being the main culprits. Since their inception in 2018, the fund has averaged about 4.99% annually. Key contributors for this fund included Bepa Banca, Unicaja Banco, and UAUN Industrial Holdings. On the downside, Amsosam AG, Nexity SA, and Umicore SA were the biggest drags. Net assets here are about $64 million with 47 holdings. The net advisory fee was just over $94,000 and portfolio turnover was 39%, indicating a fairly active trading strategy. Finally, we have the Pzena International Value Fund investor class. Costs here for a $10,000 investment were $108 or 0.99%. Performance was strong, with an 18.67% gain over the past year. International equity markets had a good run, with European markets benefiting from rate cut expectations and China boosted by stimulus. This fund not only performed well, but also beat its benchmark, the MSCI EF Index, thanks to stock selection in information technology, financials, and the United Kingdom. Its total return since inception in 2021 has been about 5.38%, and China boosted by stimulus. This fund not only performed well, but also beat its benchmark, the MSCI EF Index, thanks to stock selection in information technology, financials, and the United Kingdom. When entgegen from rate cut expectations and China boosted by stimulus. This fund not only performed well, but also beat its benchmark, the MSCI EF Index, thanks to... For the International Value Fund, top contributors were on a high precision industry, Alibaba Group Holding and KexaBank SA. The key detractors were Magna International, Randstad NV and Galaxy Entertainment Group. This fund has net assets of nearly $98.5 million with 69 holdings. The net advisory fee was about $358,000 and the portfolio turnover was 21%. One interesting administrative note across all these funds is the change in their independent public accounting firm. They've moved from Tate Weller and Baker LLT to Deloitte LLP. The reason given is that the advisor preferred a larger firm, and importantly, there were no disagreements with the previous auditor. This is generally a good sign of smooth transitions in financial reporting. Looking at the fees paid to the accountants for the year ending February 28, 2025, audit fees totaled $125,000 and tax fees were $25,000. For the previous year, these were $94,500 and $18,000 respectively. These figures are relatively modest when you consider the overall size of the funds managed. Now let's peek at the actual investments. For the Mid-Cap Value Fund, the top holdings as of February 28, 2025 included Humana Inc. at 4.5% of net assets, Baxter International Inc. also at 4.5%, and Dollar General Corp. at 3.8%. The sector breakdown shows a significant portion in financials at 18.9% and healthcare at 17%. Industrials and technology also represent substantial portions. For the Emerging Markets Value Fund, the top holdings were Samsung Electronics at 3.8%, China Overseas Land and Investment at 3.7%, and Alibaba Group Holding at 3.6%. The fund's geographic breakdown is heavily weighted towards China at 26.6% and the Republic of Korea at 12% and 8%. The small cap value fund's top holdings were led by First American Government Obligations Fund at 3.9%, C&O Financial Group at 3.6%, and Korn Ferry at 3.1%. This fund also has a notable allocation to financials at 22.3%, followed by industrials at 20.3%, followed by industrials at 20.4%. The International Small Cap Value Fund's top holdings were dominated by the First American Government Obligations Fund at a substantial 25% of net assets. Other top holdings include Origin Enterprises and Senior PLC, both around 3.5%. The fund's strategy places a significant emphasis on Japan, representing 16.2% of its net assets. Lastly, for the International Value Fund, the top holding was Daimler Truck Holding AG at 3.2%. Followed by Roche Holding AG and Sanofi, both at 2.8%. This fund shows a strong geographic focus on Germany at 13.6% and the United Kingdom at 14.1%. Looking at how these funds make and spend money, the Mid-Cap Value Fund had total investment income of about $3.3 million, but reported a net investment loss after expenses of roughly $1.7 million for the year. This was primarily driven by a large unrealized loss on investments. The Emerging Markets Value Fund, however, had a much healthier year, with over $89 million in investment income and a net increase in net assets from operations of nearly $175 million. This fund demonstrated strong growth. The Small Cap Value Fund saw a net investment loss of about $2.8 million, also due to unrealized losses on investments. The International Small Cap Value Fund had a net increase in net assets from operations of almost $2 million, showing slight profitability on operations. And the International Value Fund had a very strong showing operationally, with a net increase in net assets of nearly $14.5 million from its operations. Let's look at the per share data for the Mid-Cap Value Fund investor class. The total return for the year was negative 1.69%. Over 5 years, it's averaged 13.09%, and over 10 years, it's averaged 7.73%. The expense ratio after fee waivers was a reasonable 1.24%. For the Emerging Markets Value Fund investor class, the total return was a solid 9.57% for the year. The 5-year average is 10.47%, and the 10-year average is 5.92%. The expense ratio after waivers was 1.42%. The Small Cap Value Fund investor class had a negative total return of 4.15% this past year. Its 5-year average is 11.98%. The expense ratio after waivers was 1.31%. The International Small Cap Value Fund investor class delivered 8.66% this year with a 5-year average of 12.17%. Their expense ratio after waivers was 1.44%. And finally, the International Value Fund investor class reported an impressive 18.67% return for the year, with a 5.38% annualized return since inception in 2021. Their expense ratio after waivers was the lowest at 0.99%. Now, a crucial part of managing these funds is the investment advisory agreement. The Board of Trustees reviewed and approved the agreement with Pzena Investment Management. They looked at the quality of services, historical performance, costs, economies of scale, and the advisor's profits. For most funds, performance against peers and benchmarks was generally positive over the long term, though there were periods of underperformance. Costs and expense ratios were also compared, with some recognition that fees for certain funds were above the median, leading to some fee waivers and expense caps. A small but neat detail is the householding policy, where they mention that to save costs, they may send only one copy of shareholder documents if you have multiple accounts at the same address. If you don't want that, you can opt out. So what's my take on all of this? Well, generally the Pzena funds seem to be navigating the market with mixed results. The mid-cap and small-cap value funds had a tough year operationally due to market conditions and stock selection. But looking at their longer-term performance, they've delivered decent returns. The emerging markets and international value funds, on the other hand, showed stronger performance and more consistent returns, especially the International Value Fund, which outperformed its peers and benchmarks this past year. The costs for all funds seem to be in a typical range for actively managed funds, and it's good to see the advisor actively waiving fees to keep expenses down for investors. In direction, Pzena appears to have a core strength in developing value-oriented investment strategies across different market caps and geographies. Their emerging markets and international value strategies are showing particularly strong results. However, the mid-cap and small-cap value funds face challenges in stock selection that need to be addressed for consistent long-term outperformance. A key risk, as highlighted in the filing, is currency risk for international funds and general market volatility for all. The company's move to Deloitte as their auditor is a standard operational change that doesn't raise immediate red flags. Overall, while the performance varies across the funds, Pzena seems to be actively managing their portfolios. Investors in the mid-cap and small-cap funds might want to watch their stock selection closely, while those in the emerging markets and international value funds have seen more consistent rewards. Remember, past performance is not a guarantee of future results, but these numbers give us a good picture of how these funds operate. Alright, that's our deep dive into the Pzena Fund's latest filing. What are your thoughts on the performance of these funds, and do you invest in any of them? Let us know in the comments below. If you found this breakdown helpful and want more clear, simple insights into corporate finance, please hit that like button and subscribe to the channel for more. And definitely join our Discord community linked in the description. We have some great discussions there. Thanks for watching, and we'll see you in the next Decode.